Hey traders, Jason here from Leavitt Brothers. So in this video, I'm going to do a little kind of friendly reminder that great stocks can suffer huge losses. I think we have a tendency to say like, hey, here's a great stock. It's up several 100%. It keeps steadily trending up. It's part of a hot group. That group's going to be in play most of the time for the next 5 years. I don't even need a stop. I'm just going to let this thing go. Like, I can't lose on this. And then the stock drops 20, 30, 40% and takes back several months of gains in a short period of time. So I'm going to show you a bunch of examples just as a friendly reminder that even great stocks can suffer big losses and you have to be responsible managing your trades. Okay, first, quick reminder, at Leavitt Brothers we're running our Cyber Week special. Buy an annual membership, get 3 months free. You can just go to the homepage, click subscribe, sign up for a year, and after your card is run, we will add on the extra 3 months. This is a little bit of it's like a double. We have like a double special right now because next month, we're going to be raising our prices, and which means if you've been on the fence thinking about joining, now's the time, because if you join now, you get a lower price and 3 months. If you join next month, you get a higher price without the 3 months. So if you've been on the fence thinking about it, you've been getting our emails, you've been getting our videos for several years, and you've been thinking about joining, now's the time to take the plunge. All right, let's get into it. Again, the purpose here is just to serve as a friendly reminder that great stocks can suffer big losses, and you have to be responsible managing them. Okay, here's DOCN. This was a stock that we've played at Leavitt Brothers. Support at the 50, support at the 21, support at the 21. We had a breakout there. Obviously enjoyed a huge run, and then in a matter of less than 2 weeks, it gave back a huge chunk of it. Okay, so if you had the attitude that this is a great stock, I can't possibly lose, every single time it dips, it recovers, I don't even need a stop, well, you just gave back a huge chunkier gain. Okay, better to manage it wisely with a little bit of emotional detachment than get so involved that you can't actually manage the trade. Next up, here's ASAN, another stock that we played at Leavitt Brothers. Broke out here, ran up. We played it again over in here. We posted it as a trade over here. Okay, nothing wrong with that. We had, with volume here, and volume here was pretty good. No reason to not play it again. But obviously, it struggled here. So for anyone who said, I'm just going to judge this based on the chart, there were enough warnings here that the stock was probably running out of energy. It gaps down. Definitely could have had a stop in below somewhere here. So anyone who had the attitude that this is a great stock, it always goes up, even if it suffers a little bit of a dip, I'm just going to hold on, it'll be fine. Well, you just gave back several months worth of gains in less than 2 weeks. This move here was legendary. Okay, the stock just went up and up and up and up and up, just day after day after day after day. And obviously you can see, despite how strong it was here, despite all the good things you hear on social media about it, how this is just a can't miss stock for the future, you can buy and hold, etc., etc. Maybe you can buy and hold, that's fine, but as a trading candidate, you can see drop from 220 down to 165. That's a big drop, not a drop you can hold on to if you are trading it. Upstart was a can't miss stock, broke out over here after earnings, rode its 8 up, came down, touched its 21. Ran into some trouble here. There were definitely some warnings. Gaps down after earnings, and if you think like, hey, that's the worst of it, all the bad news is priced in, well, the stock has continued to drop. It is 400 top here, now it's down to 160. It has been absolutely crushed. So for anyone who had the attitude that this is a can't miss stock, I don't even need to stop, I don't need to manage it, like it's going to do fine, you just suffered a huge loss. Okay, again, the purpose of this video is just to remind you that great stocks can suffer giant losses, and you should manage them wisely with some emotional detachment, and don't get so hung up with them that you give them such a long rope that you end up hanging yourself. Unity Software, another one. We traded this at Leavitt Brothers several times in here, 10-15 points at a time. You can see it broke out here, ran up over 200, and in less than 2 weeks it's given all that gain back. Okay, so hot stock posted a big gain. It's part of the metaverse. The metaverse is the future, right? I don't need to stop on this. I don't need to manage the trade, etc., etc. Well, you just suffered a big loss. Okay, manage the chart, and that will occasionally cause you to get out of a position early and maybe not nail a bigger run, but it'll also enable you to avoid this type of a situation. Here's Snowflake. This is another one of our plays. We had this as a breakout over here in the 325, 330 area, went up to 400, our target. And obviously you can see here in a very short period of time, it dropped from like 405 down to 305. Okay, bouncing today, but that's irrelevant. The point is you had a super strong stock trending up, finding support over here at the 50, consolidating, pressure building, breaks out, consistently and steadily runs up all the way to 400. And then it drops 25% in a matter of 2 weeks, okay? We trade stocks, we don't marry stocks, okay? I like to say we date them, but we don't marry them, okay? Ride them for everything they're worth and then get off when they stop working, okay? A friend of mine used to talk about, he thinks about trading stocks as like hiring employees, that you hire an employee and as long as they're doing their job, you keep them. And if they stop doing their job, you fire them and you hire somebody else, okay? No emotional attachment to it. Here is INMD. This was a stock that had done really well. Support from the 50, 50, 50. Get a little, found support above the 50 there. Rides up as 21. There are numerous places to play this. Here's a breakout here. But it obviously wasn't going to follow through. And even if you have a loose stop, like say below the 21 here, and you got out over here, that's fine. Okay. If you're a swing trader and you're trying to nail a big move, you have to use a little bit of a looser stop in order to nail those big moves, because you can't get out every time the stock just has a little bit of a wiggle move. So if you played the breakout here at 90 and you got out at 89, 88, 89, something like that, hey, you lost money. That's just the way it goes. But it's certainly a heck of a lot better than suffering a 20-point loss, which is what would have happened if you hung on for another 2 weeks. Okay, so just because the stock did incredibly well over here doesn't mean you could assume it's going to continue to do pretty well. Airbnb, got double bottom here, boom, boom, breaks out there, trends up, terrible trend line there, breaks out before earnings here, and then gaps up on earnings. You're thinking this is a great stock, this is the future. These guys in 5-10 years are going to just completely dominate the space that they're in. And then you look at this and you realize, and then 2 weeks later the stock has given back all the gains from the previous 2 months. Okay, so will Airbnb be a giant company, a $1 trillion company 10 years from now? Maybe, I don't know. But if you're going to trade it, then you have to manage it as a trader, not manage it as if you're going to hold for 10 years. Okay, great companies that do incredibly well can suffer big losses. A couple more here. Elastic, volatile but steady trend up. You can see support from the 50 here, dips below, support from the 21 there, but then it takes out the 21. And if you think like, hey, I don't need to get out here, I'll just wait, maybe it'll find some support and then bounce, then it does this and then it follows it up like this. Okay, so when you get this type of thing happens, if this is a swing trade, you're not getting out until here. Okay, you got to give it some room, but once that happens, you just got to get out. You got to get out. Even if you played some sort of a breakout here, you got to get out over here at a loss. Otherwise, your small loss turns into an absolutely catastrophic loss. Zoom, of course, went up 1,000% after the virus broke out. It topped a while ago and has been trending down. Anyone who clung to it, just thinking, hey, people going forward are going to work from home. Well, obviously the stock has dropped a whole bunch. Peloton, another one. People staying home, people buying these bikes. Stock did really well, went up like 500%. Well, topped out at 130. Now it's down into the 40s. Okay, so great company, great stock. Maybe they are the future of fitness. I don't know, but you manage the chart. You don't manage the story. Square in the past was a hot stock that you couldn't go wrong with. I mean, the stock was down in like I remember playing it down in like the $30, $40 range. Then it goes up all the way to 300. We're talking like almost. Overall, this is more than 1,000% winner. Well, today it's at a 52-week low. So even a great company that's getting into more heavily into like a hot space such as Bitcoin can suffer a big loss. PayPal, same thing. There was a time when this was a small company and like a small up and coming company, and growing pains, all that stuff, and then it went on a run, huge wins, huge market cap, everything. But you know what? It's suffered a huge loss. So even a great stock, even a great company can suffer a big loss. Whoops. All right. Last one, Ring, another one that had a huge gain as in a prior life, and it's been all downhill this year. Okay, so the purpose of this, again, is just to offer a friendly reminder that great stocks that post big gains, that are hot, that seem like the it stocks, that can do no wrong, that are in the right groups, they can suffer huge losses too. Okay, huge. Okay, stocks that go up 400 or 500% can get cut in half in a very short period of time. So this is just a reminder that when a stock starts to break down, get out quickly, because if you don't get out with a smaller gain than you had, or if you don't get out with a small loss, that gain is going to go away. That small loss is going to turn into a big loss. And if you have a bunch of those, you're not going to be trading very much longer. All right, quick reminder, Cyber Week special at Leavitt Brothers. Buy an annual subscription, get 3 months free. All right, hope you guys are doing well, and I will see you next time.